Texas remains a premier destination for business registration, but if you plan to incorporate here in 2026, the regulatory requirements are far stricter than they were even a year ago. The 89th Legislature recently created the Texas Regulatory Efficiency Office, or TRIO. Their mission is to eliminate red tape and make the incorporation process as seamless as possible for new entrepreneurs. To achieve that efficiency, the state pulled the plug on outdated methods. Senate Bill 2411 outlaws analog filing, forcing all applicants into a digital-only system. The state is cutting administrative bloat to save you money. However, with analog channels removed, failure to sync with these digital-only requirements results in immediate non-compliance.
This video contains affiliate links. I have a relationship with the brands in this video and earn a referral fee when you shop through the links in the description below. Before we dive into the exact steps of registering your business in Texas, let's talk about your foundation. You absolutely cannot build a successful brand or protect your personal assets without a properly structured legal entity. Most people try to launch in the Lone Star State as a sole proprietor or cut corners on their state filings, and that is exactly why they face massive personal liabilities or get their applications rejected. Whether you decide on an LLC, a C-Corp, or an S-Corp, your business must be a legitimate, separate legal entity in the eyes of the state. That's where Busy comes in. Busy is the absolute best formation service out there, handling your entire Texas business setup for just $0 plus state fees. They take care of all the heavy lifting for you. Filing your certificate of formation with the Secretary of State, providing your legally required Texas registered agent, securing your EIN, and setting up your ongoing compliance alerts. This is non-negotiable if you want to stay compliant and protect your wealth. I've linked my full, in-depth review of Busy in the description so you can see exactly why I strongly recommend them. Make sure to use my link down below to get your Texas business set up right through Busy today, which will also unlock exclusive discounts and perks.
Registration begins by securing a unique business name and filing Form 501. Next, appoint a registered agent with a physical Texas street address. P.O. boxes are rejected. Finally, file your certificate of formation via SOS Direct, Form 205 for an LLC or 201 for a C corporation. Filing either form carries a $300 state fee. And because the system is now heavily digitized, you must also pay a mandated 2.7% convenience fee for processing the credit card transaction. If you need to move quickly, the state offers tiered expedition rates. You can pay $50 for a standard expedite, or you can use the new Texas Express tiers, which cost $500 for next-day service or $750 for same-day processing if delivered in person. Once the state confirms your entity, you must draft your internal governance documents. For an LLC, this is an operating agreement. For a corporation, these are your bylaws. These documents define exactly who owns what percentage of the company and how the profits are allocated. The state government does not ask to see these documents, as they only require the $300 public registration fee to be paid. But without them, your founder's equity is unprotected from internal disputes. The next step takes us outside state jurisdiction. You must request an Employer Identification Number, or EIN, directly from the IRS. This federal identification is free and is a requirement for opening a business bank account. Following that, you must address the Beneficial Ownership Information Reporting Mandate from FinCEN. This requires you to disclose the individuals who ultimately own or control the company to the Treasury Department. The deadline here is uncompromising. Entities formed in 2026 have exactly 30 calendar days from the moment their registration is effective to file this report. If you miss that window, you accumulate a $500 civil penalty for every day you are late. Finally, you must secure any necessary operational permits from the state. For example, if you sell physical goods, you will need to register for a sales and use tax permit through the comptroller. Texas has streamlined the initial formation process, but these federal requirements act as a filter. Failing to immediately report your ownership data can bankrupt a new venture through fines before the business even opens. Your legal structure dictates taxes and capital. The LLC offers asset protection and pass-through taxation. The C corporation faces double taxation and board formalities, but is mandatory for venture capital. An S-Corp is a tax election for an LLC or C-Corp, used to reduce self-employment taxes. Maintaining that S-Corp status requires you to adhere to strict IRS limits. Your company cannot have more than 100 shareholders, all owners must be U.S. citizens or residents, and you are restricted to issuing a single class of stock. Selecting the wrong entity type creates a structural flaw. It dictates how much equity you can legally distribute to investors and how much profit is lost to taxation. To understand how these rules affect your bottom line, we have to evaluate the financial landscape of 2026. This side-by-side comparison shows the trade-off. On the positive side, you have massive financial incentives. There is zero state personal income tax, and the franchise tax no tax due threshold has been adjusted to $2.65 million in annualized revenue. The state also provides specific operational relief. There is a new $125,000 property tax exemption for business personal property. Additionally, if the new business is even if your revenue falls below that $2.65 million mark and you owe zero franchise tax, you are legally required to file this report by May 15th every year. Forgetting to file triggers a $50 penalty and can result in the state revoking your right to do business. Filing the paperwork correctly secures one of the most robust financial and liability shields available in the country for a $300 entry fee. The Texas business advantage is real in 2026, but the benefits are reserved for those who navigate its digital compliance schedule.